This is the weekly outlook here at XM.com. Thanks for joining us. I'm Christina Marujos, and with me today is senior investment analyst Rafi Boyajian to have a look at the week ahead. It's true that economic data took a back seat lately. However, they'll be claiming their part in the spotlight in this coming week. We have important data releases for March, a time when the virus has spread across the globe and left its mark on the economy. So, Rafi, let's start by having a look at China. It's no longer the coronavirus epicenter, and markets will be looking at the PMI releases, especially since last month's numbers were extremely disappointing. Are we going to get any positive news?
Well, we might just see some much needed positive data coming out of China in the coming days because, of course, we did see the number of infections in China peaking way earlier than the rest of the world. And in fact, China has now started easing some of those restrictions put in place since way back in January and February. So we are expecting the manufacturing PMI, at least the official one, to rebound quite significantly from a record low of 35.7 to 45 in March. But it's also going to be important to watch the services PMIs as well. We've got, of course, again, along with the manufacturing, we've got the official and the cash in market ones due in the coming days. So if the services PMIs, at the very least, they show signs of stabilization, because, of course, with a lot of the restrictions in place, it's unlikely we're going to get as much of a recovery in the services ones as in the manufacturing, but at the very least, some stabilization there could possibly add to the improved risk appetite we've been seeing over the past few days.
Now, let's have a look at Australia as well, since its economy is so closely tied to China's. We have some domestic data coming up as well, but are they likely to have much of an impact on the Aussie?
Well, not really. We're not expecting the Aussie to be moved much from domestic data, although the AIG manufacturing index will be important, as that will be for March. But on the whole, the Aussie will likely take its cues from the Chinese PMIs, as well as, of course, global risk sentiment. Now, following that the U.S. Congress approving its $2 trillion stimulus package, we did see a sharp recovery in risk appetite and in global stock markets, and the Aussie also recovered on the back of that. So any deterioration in risk sentiment in the coming days will be the main risk for the Aussie in terms of reversing back down again.
We'll have a look at the US in just a moment. Before that, I want to move into Europe. It's been plagued this month by the virus outbreak. The situation isn't under control still. What do you think we'll see in the economic sentiment indicator and the flash inflation numbers for March that are due in the coming days? And how will the euro move?
Well, that is right. The situation in Europe is far from being under control. We're still seeing huge increases in the number of people being confirmed as positive for the coronavirus. And more alarmingly, we're seeing the death rates soar across many countries, not just Italy, but now in Spain and to a lesser extent in the UK and France as well. We already had, though, the flash PMIs, and they were bad. So the economic sentiment indicator is expected to follow the PMIs lower, but it's unlikely to see much of a reaction in the markets. I think what investors will be focusing on is how soon Europe manages to get the virus spread under control, because otherwise the ECB will be under pressure to do more to try and help the struggling Eurozone economies.
Now, turning to the U.S., we saw the Fed and Congress taking unprecedented actions in the last few weeks to support the economy in the midst of the virus pandemic. Now we have important data coming up, the ISM PMIs and the latest jobs report. What should we expect in these numbers, and how will the dollar perform?
Well, again, we're not expecting anything good here. Like in Europe, the US did see a sharp deterioration in the economy in March as the virus spread rapidly. And as far as the data is concerned, although so far in the US it hasn't been too bad, we just got a glimpse of what's to come from the jobless claims from the past week, where we saw a record number of Americans claiming unemployment benefits. So that suggests that the jobs report due next Friday is likely to be bad. Forecasts are for the number of of jobs to have fallen by 293,000 in March. That would be the first drop since 2010. The jobless rate is expected to jump from 3.5 to 4%. As for the ISM PMIs, the manufacturing one, having just avoided getting into contraction in February, it is expected to tumble to 44. That would be the lowest since 2009. So all in all, it's not looking like a very good week for US data. And if we do see all of the negative data, as well as, of course, negative headlines on the regarding the coronavirus, we could see it's going to be, first of all, it's going to be interesting to see whether or not the risk appetite is going to hold in the coming days, given that we just had those stimulus announcements. It's unlikely we're going to get more in the very near future. So we could see that risk appetite starting to deteriorate a little bit. And then if that does start to happen, then the dollar will likely resume its uptrend because, of course, the dollar has been the main beneficiary of safe haven flows.
I see. Rafi, thank you so much for joining me today. And thank you for watching the Weekly Outlook here at XM.com.